welcome to the Super Stonk Brothers episode number 2. You have myself, Joe Kim, aka Macro 108, and Steve Palley. What's up, Steve?
How you doing, Joe?
Okay, so the topic for today is we're going to talk about investment strategies, and I'm going to kind of walk through, and Steve's never seen this before, but the way that I think about how do you build an investment strategy, and just kind of get some feedback in terms of what he thinks, how I kind of do stuff. But Steve, for you, when you think about, the way that you've been investing money to date, how have you thought about it? And what is your sort of approach?
My approach, to be honest with you, Joe, is pretty scattershot.
Okay.
Because the only way I learn in a way that really lasts is honestly to screw up. I have to try a bunch of things. I have to throw a bunch of stuff at the wall and kind of see what sticks.
Okay.
And so, I've been doing that for the past year, and stonks have boomed. I don't know if you're familiar, if you're aware of this, dear listeners. The stock market's done pretty well for the past year. So I have looked and felt like a genius, just like I think a lot of people, except for value investors, right? Those poor bastards. But I also recognize that has absolutely nothing to do with my skill at investing or stock picking or even understanding what it is that I'm doing, other than reading and listening to people who are smarter than me. And I can talk a little bit more about like where literally the stocks in my portfolio came from, and how I think about it. Or you can go first. Totally up to you.
Yeah, I can kind of actually, why don't I share my screen? And
all right.
I actually have kind of a specific approach for how you build an investment strategy. And for me, it really starts by kind of developing a philosophy. And I kind of developed this method based upon just years of making mistakes. Okay. Where and that's kind of how I started off, where, I had some money. I was like, okay, I want to invest. Oh, here's an interesting stock. Here's an interesting stock. Let me buy some of this. Let me buy some of this. Let me buy some of this. And then, I'm like, oops, this stock's going down. Let me sell. And then I just like, it was just, it didn't work. I lost a ton of money.
Now, when you say a ton of money, what are we talking? Like 40%, 50%? How big is the haircut?
I don't know. Like maybe not that badly, but like, I would say I didn't have consistent gains. Right. And so what I learned more is that, that concentration in my as far as I'm concerned, is better than diversification. And it's kind of like the Warren Buffett strategy, right? And you're going to hear different people have different perspectives on this. Like some people say you should just have a broad kind of index, for example. And I think historically, I would have agreed that that's probably the way to go. But there's also kind of the Warren Buffett notion that great businesses are very rare. And so, for me, I feel like the way forward, given kind of we talked about kind of how the future is going to be different from the past, that I think that a strategy against differentiation, given that the broader index, I think that the stock market is not, let's say after a few years and is not going to perform as well as it has done historically, then if things are going to be different, then you want to be more differentiated and concentrated, right? Like you want to own those few really good businesses. And by the way, some stocks are naturally diversified, like Amazon. They're not just an e-tailer, right? They've got a cloud business. They're going into healthcare. There's all sorts of other ways in which by buying like a single stock, you actually are buying diversification.
Yeah, so, in Amazon's case, it's like their retail business at this point might be a loss leader for the cloud business, right?
But yeah, so for me, like I think the point I want to make is that I think for any investment strategy, you should first start with what is your own philosophy. That's kind of like the base layer, right? Like so for you. So for me, I believe in concentration versus differentiation. I think, and Warren Buffett believes in that. Ray Dalio may say, actually, you probably want more diversification because certain classes of assets are probably going to go down by 50 to 70% sometime in your lifetime. And are you prepared for that? But I think so long as you have other assets and you've got, other things that are okay, then, I think it's all right to be more concentrated. And so I do have, generally speaking, my philosophy is more concentration. The second thing in terms of philosophy that I've learned is I am like the worst market timer of all, of all time. Like I'm so bad at timing the market. And so I've learned that it's just like, it's like, oh, I have a feeling the stock market's going to go up or down or whatever. But you know what? I just don't know. And I've always gotten it wrong. So I've kind of given up on trying to time the market, which
Mhm.
means that first I try to just now dollar cost average in.
Mhm.
And I basically don't trade options unless I've got an information advantage. If I have information advantage, then I might try to do that. But like 99% of the time, I'm not going to be trading options.
Yeah, we're not professional investors, right? So it's like trying to fight the quants with their models and stuff. It's like
Right,
it's going to go
right, right,
bad for us.
right. Now, the third part of and I'm just speaking about my philosophy, right? And by the way,
Mhm.
everyone should know that we're not like advisors, right? We're just talking about our own our own strategies and philosophies. But as someone who has a job, and probably this is going to be relevant for a lot of folks out there who don't have a lot of time, just a realization that I'm operating at an information disadvantage, which means that I have to now think about, so then how do I gain leverage? How do I operate against institutional investors who are spending, full time on this with a broad network of information? And
Mhm.
so for me, the way that I try to gain leverage is by relying on proxies. So basically, people who I know have strong performance where this is their job. So people like Ray Dalio, Kathy Wood, Dave Lee, Michael Burry, even Peter Schiff, and some of these guys actually disagree with one another. But I try to take in all of that, and
Mhm.
then based upon their proxies, my own investment strategy will pick like a subset of what they're doing. And besides that, because I operated at an information disadvantage, that also kind of strengthens this notion about not trying to time the market. And then I also try to think, well, where also are institutional weak points? Like when I think about the professional investors, where are they going to be weak so that I can be stronger in those areas? And so,
Mhm.
examples of those things would be operational knowledge, right? So and like in terms of the games industry, they're not going to know the games industry as well as us. They're also not going to know operational things as well as us. And that they're going to typically be thinking more linearly versus, as we talked about in the last podcast, in terms of more exponential scale. Uh,
Mhm.
the fourth philosophy I have is to basically hold forever. That and the reason
What?
why, yeah. So
Wait,
so
forever?
basically, yeah. So my theory now is when I buy a stock, I don't ever plan on selling it. Unless, I mean, so it depends on like, so for me personally, I have like three kind of like funds, basically pools of money that I invest. One
Sure.
is like kind of like a conservative pool of funds. One is more growth. And then I
Mhm.
have another smaller fund for my kids where they're
Okay.
investing the money for their college.
Right.
um, but typically for me, I basically try to hold forever because one, I want to eliminate emotions. And when I'm
Mhm.
investing
Mhm.
into something, I know I'm bad at timing, and it's really, really hard to understand when things are going to pick up. Or if I think that if you have a specific thesis, that it's really hard for human beings to understand when these things develop over time. And so when
Mhm.
you look at certain stocks, whether it's Tesla or even PayPal or Square or these companies, and they just have grown into tremendous businesses, right? And so if you have a thesis, you have to let it play out. And tax is huge, right? So every time you
Yeah, it is.
sell, not getting hit by that tax is a major issue. And you can actually, if you have a lot of equities, you can actually get like loans against those equities, things like that. So it's not like you can't get liquidity, but everyone's got a different situation. But I would say if the general thinking is to hold forever, and when you must sell, then you sell, then I think that's okay.
Yeah, I learned that lesson painfully in tax year 2020, and I think pretty much boned myself. But I'm
Okay.
treating it as a learning opportunity and a rebalancing opportunity, right, Joe? So
Sure.
it's not that bad.
Yeah. And then the last thing is to have an objective. So I put here 10x in 10 years. That's basically the objective that I'm trying to give my kids.
Wow.
Basically saying, hey, here's this pool of money. Unless you 10x it, you're not going to be able to, like, the three of you are not going to be able to go to college or pay for your college fully. So you guys are, and the reason why I did that is to instill in their minds, one, I wanted them to try and think about, how do you get bigger gains? How do you think outside of the box, right? And
Mhm.
secondly, I wanted them to think, this goes back to a Bill Gates quote, to start thinking not only in terms of a year, but in terms of decades, to train them on
Mhm.
long-term thinking. But,
Mhm.
you know, based upon these philosophies, these kind of philosophies should determine ultimately the kind of targets and the way that you kind of approach the stocks that you invest into. One
Mhm.
philosophy I also didn't put in here is I actually also believe in social good. So meaning that, and one of the reasons why I don't invest in Bitcoin, I actually did invest in Bitcoin. I sold out of it after I thought about it. And I was like, well, you know what? I actually think that Bitcoin, so my price target for Bitcoin is $200,000, right? And I
Mhm.
think I think it's very, very reasonable to expect it gets to 200K or more. But
Mhm.
I also think that the main holders of Bitcoin are basically billionaires or Silicon Valley douchebags, generally speaking.
Satoshi Nakamoto is the main holder of Bitcoin, and we still
Right,
don't know
right.
who he is.
Yeah. And so for me, I think that when I look at the world and think about, okay, is Bitcoin good or bad for the world? Well, I think it's going to actually make the, wealth inequality a much bigger problem.
Mhm.
And I just don't believe in that. So, and not only that, but I also believe between Bitcoin, which can go up to like 200K,
Mhm.
and my outlook for Tesla,
Mhm.
I actually think Tesla's, so I'm actually more heavyweight on Tesla, and then I sold out of my Bitcoin. So,
Mm.
but that kind of speaks to the underlying philosophy. And again, for every person, your philosophy will be different, but then that should inform how you invest your money. And then the second layer is to have a thesis, right? Like, what are the type of opportunities I'm looking for, right? And so, like, the bottom layer is your philosophy or values or the approach that you're going to take. And the thesis are like, what are the opportunity areas? And so, why do I invest in Tesla? And we can go into this in more depth later, but I also believe that it's always good to bet on great leaders. And so if you, like, it's not like Elon Musk came out of nowhere, right? Like his biography came out a long time ago. People have known about Elon Musk, they've known about Mark Zuckerberg, they've known about Jeff Bezos. And so when you invest and bet on some of these key leaders, these leaders have shown that they can increase shareholder value and create value in their companies in very powerful ways. And I would say in ways that supersede the market. Like, think about Tesla in the automotive space, right? Like, automotive should be a terrible market, but Elon
Mhm.
Musk makes it a very powerful market to be in.
Yeah.
And then other thesis could be like, when I look at some of what I'm reading about AlphaFold, and you're like, wow, AlphaFold could be a game changer. And so in one of my funds, I'm, making a bigger bet on Google, right? And so I think that because Google is, betting heavily in this technology. Another thesis is in terms of like programmable biology, and so based upon looking at proxies, I'm in terms of looking at the space. I think about what are the companies in the space, and I see what is Kathy Wood's main holding, and I was like,
Mhm.
okay, CRISPR is one of them. Okay, well, let's invest in CRISPR. The
Mhm.
other thesis is that if you believe that the dollar is hosed over time, and we can do another podcast that speaks to that, then I want to be investing in China, because I do think that money's going to start flowing, because I believe that the world is heavily overweight US and dollars,
Mhm.
that some dollars will flow into the renminbi. Like how much, I don't know, But then I basically looked at Ray Dalio's holdings and I noticed that the number one China holding for him is Alibaba. So I was like, okay, I'll buy some Alibaba. It hasn't over the last year has not done that well for me, but I'm down like 9%. But again, I hold
Hold
forever.
forever, buddy. Yeah, hold forever.
Right? Yeah. And then
So no
finally, in
big deal.
terms of so I also believe in this thesis in terms of inflation, like how much, I don't know, but that would lead me to look at some opportunities in real estate. I haven't been that active in terms of looking at real estate right now, but I do kind of look at it from time to time to see if there are opportunities. But you know, but for me, this is how I develop an investment strategy. It's these three layers. It's starting with this philosophical layer in terms of philosophy, values, then having specific thesis in terms of where are the opportunity areas, then based upon the thesis that you have, trying to find specific names to target, and then it really narrows the universe to a few names. Then you think about what are the best companies in these spaces, and for me, these are some of my top names. And so today I'm going to be investing a lot in these names. Now this isn't all, right? So for example, like I think I mentioned I have kind of three pools of money, right? My conservative pool, and that pool, I'm also investing. I try to diversify that up a little bit more. So I'm investing in other areas like insurance, like Lemonade. It's got some gold. It's got some other stuff like that. It's got a few more names. And then my growth fund is more diversified. It's heavier Tesla because that's my number one growth story, and things like that. And then my kids fund, I let them make, they're like way overweight Tesla just because they're crazy, but, I let them do
crazier than
want.
you.
But for me, it's like even if they mess up, and like I think it'll be very instructive for them if they and it's crazy. They're like looking at the stock market every day. They talk about stocks I don't even know about. They're like, hey, Daddy, did you know Moderna is like up or down today? I was like, Moderna, why are you guys looking at that? But yeah, I think it's been pretty cool. But anyway, so this is my strategy, the Macro 108 investment strategy. I don't know. What do you think, Steve? And maybe you could speak to a little bit in terms of like how you're looking at stocks or some of the stuff that you're invested in.
I will, but first I want to review the Macro 108 investment strategy, the mystical Hindu investment strategy here. So first of all, I want to say this is really well thought out. It's internally consistent, I think. I understand what it is you're trying to do and why you're doing it and how you're doing it. I have questions. Sure. All of that said.
Yeah.
So a 10x return in 10 years, what does that amount to in like an annualized sense? Do you know?
29%, or is it 26% or 29? It's 20 something percent. It's
a lot, right? It's a high number. And so it's roughly it's over 3x the long run return rate of the S&P 500, which I believe is about 8%.
Right. Although Kathy Wood's target now is 25%.
Okay,
up from 15%.
Got it. So she's trying to do the same thing, right?
Well, I'm a little bit higher. I think, so 10x in 10 years is 26%. But by the way, this is the objective for my kids' fund, right? Not for my fund, but
got it.
Yeah, and basically, there's a specific purpose in structuring it in that way.
Okay, got it. And so you and I have sort of product management backgrounds, among other types of backgrounds. And so as product managers in the free-to-play mobile games business, which is the business we both operate in, we think about the longest levers, right? How do I maximize? Like, what one thing can I change? In our case, up the funnel, right, is what we call it, in order to generate maximum positive change in the amount of money I'm making. And it seems to me like you're looking for long levers here. Right? What are the handful of things I can do to kind of set it, forget it, and then hopefully get a 25 to 30% annualized return over the next 10 years? Would that be an accurate characterization of what you're going after?
Yeah. Well, and again, this is for my kids' fund because I purposely kind of underfunded it a little bit, but but I would say like it's interesting the way that this has played out because, as I mentioned, they're overweight Tesla. And And that must mean they think that in order to achieve their goal, that the other companies that they're looking at, they don't think can achieve those targets, which is why they're so like 50%, right?
Yeah,
is Tesla.
that's yeah. So there are clear bull cases for all of the targets on this board, and we can go through the bull cases if you want. For what it's worth, I'm long Tesla, like you. I'm long not CRISPR as an individual stock, but I'm long ARCG, which is Kathy Wood's genomics fund, right? So you bought the top holding in that fund, and I just bought the whole fund.
That's right.
Yeah, as a source of growth.
I just don't think so for me, because I believe in being concentrated, I don't understand. Well, for me, I don't feel that there's value for me to be more diversified and to pay fees when I could just buy it directly.
Yeah, reasonable. Assuming that you bought the right one. Right?
Yeah.
Alibaba is tied to the rise of China. It's the Chinese Amazon, more or less. So clear bull case there. Real estate pretty much always does well, except when it doesn't. But I understand the bull case. What I'm getting to, of course, is that there is a clear bear case for each one of these targets too. Now, I'm a believer in Elon Musk, and as I said, I'm long Tesla. Tesla is my fourth or fifth biggest holding, but I'm nowhere near as concentrated as you. It's maybe 4% of my portfolio, something like that. Most of my portfolio is low fee Vanguard index funds, and I can talk about why that is later. The bear case for Tesla is that if something happens to Elon Musk, Tesla goes to shit.
It's interesting that you say that, because the risk that most of the institutional guys talk about is not that, but that is the number one risk to Tesla.
It is. And so Elon is one of the smartest people on planet Earth. He personally thinks that he is number one, the smartest guy on Earth. I don't think there's any question about that. I think, I think he has an argument. Just if you've listened to that guy talk, like there's no real doubts on his end about what he's doing or why he's doing it. And he regards like anybody with a contrary viewpoint as anywhere between a nuisance and an enemy. Is the way I put it. I would say that he has not demonstrated the most mental stability out of all the people of his intelligence level that we could choose to follow. And he's out on the factory floor a lot. So I'm just going to point those handful of things out.
I agree in terms of the key risk. The key risk to Tesla is the safety of Elon Musk.
Yeah, the safety and his performance more generally, his ability to tweet and move markets, which he does increasingly.
I don't care so much about that, because I think of those things as more short-term issues versus I think in the long term, again, if I'm holding forever, so long as he's safe, I feel good about his ability to scale Tesla and also just to find new opportunities for Tesla. And we can do a whole podcast on Tesla. And
I think we should.
For sure.
Yeah. I think Tesla's present valuation makes no sense from a value investing standpoint, which, we're not really value investors. Unless you assume that 10 to 20 years from now, Elon is operating a gigantic fleet of level 5 automated robo-taxis that has taken over 15% of the total transportation budget in the United States, right? Something like that. That's kind of what's priced into the enterprise value of Tesla at the moment. And I'm just throwing out numbers, but like that's kind of like what we're going for, right? With Tesla, it's robot taxis.
Well, I mean, we can talk about it later, but I do think that if you build a model about the robo-taxi and full self-driving opportunity, that, back of the envelope calculations, you can get crazy. I mean, you can get numbers as high as 10
probably
trillion.
crazy. Sure. Probably crazier than what we're seeing right now. But There's some execution risk there,
Yeah.
to put it mildly.
Sure,
Maybe
yeah,
Elon's the guy to do it. I don't know. I'm just pointing out the bear case.
yeah,
Bear case for Google and AlphaFold, I think, is an antitrust, pretty straightforward.
yeah,
Bear case. You could turn that on its head and say, well, if Google ends up spinning off AlphaFold, it could actually outgrow Google. If you're right.
yeah, yeah. For me, I feel that the Google risk isn't so much the downside risk; it's the upside risk. Are they going to be able to commercialize it? You know, Facebook's working on some type of AlphaFold technology as well. Not,
Mm-hmm.
I mean, I don't know how credible Facebook is as a competitor in that space, but you know, competition, things of that nature. But you know, for me, I view it as a safe investment with a kind of call option for a much bigger opportunity,
Mm-hmm. Mm-hmm.
game changing
Makes sense.
opportunity, an opportunity with the
Yeah.
technology that can do all sorts of stuff. So
Well, it enables things like genomics in particular, right? AlphaFold is for
and
genomics, as I understand it.
yeah, fixing climate change. I mean, like literally
Yeah.
almost anything. Right? Like,
Yeah.
so yeah,
Bespoke nanoparticles, right? And
yeah,
computational chemistry is what it's for, and it is fascinating technology,
yeah,
to be sure. Somebody's going to get it, and it's probably going to combine with quantum computing, is my guess, to make something really truly useful and transformational. Um, so the bear case for CRISPR, look, genomics is real. We're starting to get permanent cures to rare diseases. Like they're starting to trickle out more and more. I think the
yeah,
fruits of genomics are also evident in the remarkably fast development of vaccines for COVID, right? That's also a genomics story. Same sort of bundle of techniques and technologies. So the technology is real. The question is, did you buy the right company? I don't know. Do you know?
yeah. I mean, yeah. Well, I mean, again, so for me, like I said, like I am fundamentally operating under the assumption that I don't have the time to investigate this stuff to learn it.
Yeah. Yeah.
So that's why, again, based upon my philosophy, I'm investing by proxy. I'm assuming
Yeah.
that Kathy Woods people really investigate the shit out of this, and you know,
Sure
and
they
so
did.
that's why, yeah. So that's why. So I'm betting on the thesis and on ARC's analyst's ability to pick out the right winner. Just like, you know,
Which
when I
is,
invested in
yeah.
Alibaba, I invested because I feel like, okay, Ray Dalio, I'm betting on you.
Yeah,
I hope
sure.
you pick the
So
right China stock.
the point that I'm getting at for
Yeah.
genomics is, like, you bought CRISPR, I bought ARC-G, which has
Okay.
another, I don't know how many stocks, probably 30 or 40 stocks. And I don't know what percentage of ARC-G is in CRISPR. Do you offhand?
I think if I remember correctly, it was somewhere between 3 to 6%,
Okay,
maybe
so
closer to
not a
three.
substantial bet. Not a substantial bet, but it is the number one holding.
Well, I mean, but they're capped at 10%. So for any single
Okay.
name.
Be that as it may, it's under 10% pretty substantially,
Yeah.
you'd agree.
Yeah. Yeah, for sure.
So how confident are the team of analysts in that particular stock? I don't know. It is named
Yeah.
CRISPR, which is the foundational technology. So it's got
Right.
the marketing battle under control. But I'm just saying, yeah, I'm paying a fee, and my winnings will be dilute, very dilute. If CRISPR is the winner take all in genomics, and you will win, not me. It's just you're rolling 100-side die here, right? That's what you're doing.
Yeah. Well, yeah, and I think though that, you know, in terms of being concentrated, even if it even if it doesn't win hugely, so long as some of my other names win, then
Sure, sure,
I feel
sure.
like I'm
One of your
okay.
other 5 names. Well, one of the names is real estate,
Yeah.
and we'll
Well,
get to
and by
that.
the way,
Uh,
that's in my growth pool, right? This is my growth pool.
oh,
So
okay,
it's
okay,
highly concentrated. Yeah,
got it.
there's not more than 5 names there. So
That's amazingly brass ballsy, I guess I'll call it.
well, but then I also have my other pool, which has gold, platinum,
Okay.
lemonade.
Okay.
I'm trying
Got
to
it.
find an entry point into Airbnb there as well, where that's more diversified across more,
Dude,
more
I
stuff.
just YOLO'd right into Airbnb day one, and I'm up 10% or something on that. Not
Okay.
that great, but could be a lot worse. Um, and okay, the fourth one is Alibaba. That is the Chinese Amazon, so that's a China story. China story is pretty clear on the bull. On the bear, I think it's a political risk story. Very simple,
Yeah. Yep.
right? Does Xi Jinping like Alibaba or not?
Right. And does the Chinese government want to take over payments? Right.
Yeah,
So yeah, we just don't know. It's
yeah,
risky. Yeah. And so
yeah.
like when I look back at that, I mean, because the number two stock in Ray Dalio's holdings for China is Pinduoduo, the agricultural
Mm-hmm.
company. And I
Right.
did think about investing in them versus Alibaba, but I don't know. I just feel like the opportunity also in terms of what we may potentially see as far as how finance kind of explodes and like what we're seeing with Square in the future.
Yeah.
And we
Fintech.
know
Yeah.
that that's gonna flow to some Chinese company. And I feel like it's gonna be Alibaba.
Do you pronounce it
If the
fintech or fintech real fast? Is it fintech or fintech?
I don't know. You
All
mean the
right.
pronunciation?
Yeah.
But yeah, I don't know. Fintech, I
Yeah.
think. But uh,
Fintech.
yeah, but so that was kind of like the thinking there.
Uh-huh.
But well, we'll see how it plays out. But for me, the die has been cast, right? So
Yeah.
I've invested, and we'll just have to see how it plays out. If
Yeah.
it goes
No,
to zero, it goes to zero.
it's not going to go to zero
Yeah.
unless something real weird happens.
Right.
Yeah, it's just are you gonna beat that 8% and get to 25 or 30, right, on a annualized basis regularly,
Yeah.
and which is a worthy goal. I wish I could do that. That's pretty good. I'll have to content myself with what am I at? 11% long run is what I've done so far. So I've beaten the S&P 500, which is great. But anyway, I'll get into what it is I've actually done.
Okay.
The last one is real estate. I love the idea of investing in real estate. I hate the idea of doing the work of investing in real estate. Sounds like you do too.
Yeah.
And
Yeah.
it's like, oh, I'd love to, buy Airbnb houses and like have to like hand off the management. It's like I don't even want to do that much work. I have invested in a number of REITs
Yeah.
along thematic lines. Agricultural land is a big one for me. But also like medical properties is another one.
Right.
And that's a much lower weight way to expose yourself to some of the upside in those
Yeah.
areas.
I mean, yeah, and I think the other thing that people need to consider when thinking about real estate is just the overhead and all the how, right, like you buy a stock, that's it, right? But
That's
like
it.
if you
Yeah.
like if you buy real estate, you want to do work to it, you want to rent it out, I
It's a
mean,
pain
it's a
in the
pain
ass. You
in
have
the ass.
tenants. It
Yeah,
sucks.
yeah,
Yeah.
yeah.
Who
So
wants to deal with that?
that's been kind of delaying, that's why I don't like fully pull the trigger and just think more about the easy thing, right? Because again,
Yeah,
we're both working and we've got limited time, things like that. So for sure.
exactly. Yeah. We both
But there
have.
are so many tax advantages to real
Oh,
estate
yes.
that it's always in the back of my mind. But and
Yeah,
when you
man.
think
Yeah.
about like
Depreciation.
inflation,
Yeah. Fair
right?
enough. Yeah. And yeah, look at what the Trump organization has accomplished.
Yeah,
Arguably, it's the main thing it's
yeah,
accomplished, right?
yeah,
is enabling a gigantic tax dodge legally, as far as we know. So yeah, those are your five. And again, like I like the strategy. It's not my strategy, and it's
okay.
unlikely to be my strategy, but like I applaud it. And if you are the next Warren Buffett, I'll say that I knew you before you went big.
I mean, I don't consider myself that, but I think for me, it's a way in which I can create. The other thing too about having this kind of this framework for an investment strategy is it makes my decisions so easy. I don't really have to
Yeah,
think.
yeah,
Right? It's like, okay, so for any new stock, like, is it going to beat my winner? Right. So for my
yeah,
growth, for my growth pool in particular, I was like, is this stock better than Tesla? No. Well, for me, as I put in my monthly kind of investment, I'm just going to say, okay, well, it's just going to be Tesla, or it's just going to be, CRISPR or whatever, right?
Dude, are you saying you said no to Nikola? That's crazy. It's a little joke there.
Yeah.
But
I'm a big
yeah,
Hindenburg fan myself, so
okay, Hindenburg, nice.
yeah.
I'm long Plug Power. Are you familiar with those guys?
No.
They make fuel cells for like forklifts and shit like
Okay.
that. And that has gone in concentration from like sub 1% to about 6% of my portfolio
Okay.
over the course of the last year. And I'm sure it's overweight by at least 200 to 300%, but what are you going to do, right? Anyway, my investment philosophy comes from my buddy Fred. I'm going to tell you a little story. Fred's one of the smartest people I met in college. He went immediately into iBanking out of college. He's one of those guys. He worked at Credit Suisse. He worked at Nomura. He worked at Goldman Sachs, I believe. And he now works, I forget. Real smart guy. And my grandma died about 12 or 13 years ago. Left me a little bit of money. And I was like, Fred, you're good with money. At this time, I didn't give a shit. Like, I didn't know anything. I was like, Fred, you know a lot about money. What do I do? And he's like, well, there's two roads you can go down. You can become a professional analyst like me. So sink thousands to tens of thousands of hours into understanding companies at a granular level to try to beat the market professionally. Or you can go to Vanguard, open an
S&P
account.
500.
Yeah. Buy these 5 funds, one of which is total stock market, right?
Yeah.
In like this rough sort of percentage. And then literally don't think about it for 30 years.
Yeah.
And then retire.
Yeah.
I was like, okay, I'll just do that. And unfortunately, I thought about it last year. Shouldn't have, but I did. And so now I'm talking to you. Great. I have to figure out how to invest now. If I had just followed Fred's advice, I'd still be on track. But I sold 25% of my portfolio on the way to the bottom, like an idiot.
Okay, but I will say I don't think that the index funds over the long term are going to perform like they did historically.
Right? Perhaps not. I can tell you that in the years from 2008 to 2020,
yeah, absolutely,
I cruised along at 11 or 12%.
100%.
Yeah,
absolutely.
And I understand your point, and I actually agree with it. And so I'm trying to look at my premature sale, right, as sort of a hedge against that, an opportunity to hedge and to redistribute into theses that I believe in for various reasons. And as I think I laid out in our first podcast, our intro podcast, I'm a believer in the exponential thesis. The things really are different this time, and there are going to be a handful of winners, same as you, that are enabled by increasing returns to scale in data and new technologies, and they're just going to go to the moon, then to Mars, and then out of the solar system, and they're going to leave everybody else behind. And there will be new ones, right? As new industries, actually evolve from nothing, right? It's not like there's now Facebook and then there will only be Facebook forever. We know that not to be the case. Because other companies are active in social networking. Facebook has just locked down the Facebook-like opportunity. They have not locked down the Clubhouse opportunity. They might try. Or the Discord opportunity or whatever, right? So there can be more exponential winners, but the name of the game is to identify those exponential winners early and get them while they're cheap.
Right. But I do think that when we look at, like, one of the theses that I have is on betting on great leaders.
Sure. Yeah.
I think what we've seen time and time again is that Jeff Bezos was not a secret. Elon Musk
No.
was not a secret. There was a huge, you know, amount of time that anyone could have invested in one of those companies. Like, and so I do think that there will be someone else who emerges that is
Mm-hmm.
tapped into a big opportunity
Mm-hmm.
and has that leadership skill, right? And so I
Mm-hmm.
think that once that person emerges, that's when you put all your chips in. You know what I'm saying? There's a lot of YouTube videos now of folks who just basically went all in on Tesla, and now they turn their whatever their 100,000 or $1 million into 100 million.
Yep. Yep.
Because Tesla to date has already done two 10x's, right? And you could
Mm-hmm.
kind of see like the way that the board structured Elon's compensation package was basically based upon having a big run up like twice. And I'm sure they're going to
Mm-hmm.
do it again. And I do think there is one more 10x in Tesla, but there's
Wow.
also going to be the next Elon, the next Jeff Bezos, the next Mark
Mm-hmm.
Zuckerberg. And so, yeah, I mean, people should pay attention to this podcast because when we find them,
next
yeah,
one's Joe Kim. You heard it here first.
So yeah, I mean, but that's what I'm excited to find is that person. And then when we do find that person, I think that that's when I'll probably concentrate all of my bets. Now I'm not going to sell out of my old positions, but all new money will just go into that. If we find someone like that, I just put everything all in on that
Yeah.
bet.
I mean, my two questions for you about that is how do you identify that person at a point where it still makes sense to invest in them? It's not too late. Number one. And number two, what do you do if they get hit by a bus, dude? Like, hopefully they have a
Yeah,
number
well, I
two,
mean,
like Tim Cook, right?
yeah, I think that is the big risk, and it's a risk that you're just going to have to take.
Yeah.
I mean, a lot of my philosophy actually comes from college football, right? And there's Chip Kelly, who
Ah.
ran the Oregon football program, has
Uh-huh.
zone read offense. It's completely predicated on the quarterback, and so like
Uh-huh.
when the quarterback goes down in his system, like there goes the
As
season.
we
You know what
saw
I'm
with
saying?
the San Francisco 49ers under Chip Kelly, didn't work out quite as well, did it?
Yeah, so
At that
there
time.
is that risk. There is that
Yeah.
risk. But I think that so long as you have so long as you have assets that can, kind of a conservative basket of assets
Mm-hmm.
where it's not like you're going to lose everything. Then,
Right.
in terms of your growth basket, go all in. In my
Yeah,
opinion,
yeah, yeah.
and again, we're not investment advisors. We're not telling other people what to do. But for me, that's the way that I'm going to approach it.
I'm with you, man. Yeah, and we probably need a professionally recorded. This is not
Disclaimer.
investment
Yeah.
advice. Yeah, disclaimer. Get a British lady to do it. That's
Yeah.
how it's commonly done in this space.
Right.
Cool. Is that the show?
I think that's it. Well, there you go.
All right.
That's our investment strategy and approach. If anyone out there has thoughts, please comment below. Tell us what you guys do and tell us what you guys think about how we're approaching the market. Thanks,
Awesome. Thanks,
everybody.
Joe. Till next
All
time.
right. Bye.